I think it's the time, but I think the bill that was put forward before the House was not the solution to the problem. It's a permanent bailout. It takes what was done in 2008, puts it into statute. Nothing really changes. The government has the ability to pick and choose winners and losers and bail out institutions that still claim to be too big to fail. As you and I both know, the only thing too big to fail is the American people, and this bill fails them. It doesn't do anything about the business government model, which if you read Belloc or Chesterton, it's a servile state. And what happens is big business, big government collude. They seem to like each other a whole lot more than they like the American taxpayer, the American people as sovereign citizens. So when you see that combination, the sense of injustice that we saw with the inequitable Wall Street bailout is now permanently cemented in the statute books if this is passed by the Senate and signed into law. A better way to go is to look at capping the outstanding liabilities as a percentage of GDP of any institution. Economists have speculated between 0 and 5%. I would think that this would be a far better way to go because it would prevent the very type of situation that allows institutions to claim they're too big to fail. And it also gets rid of the implied support of the federal government. These institutions can take massive risks, even with the quote-unquote regulatory scheme in place, and expect the taxpayers to be the final bailout for them. Well, I know that it's not particularly fair for us to have AIG sitting out there holding billions that they owe us. I think it's unfair for the average family right now that's very much struggling in this downturned economy. It is still a recession as far as I know, certainly from a Michigan point of view. I would tend to agree with Christina Romer rather than Mr. Summers. And I think that what they should do is understand that when people are struggling, who's going to bail them out, number one, and number two, hardworking Americans don't ask to be bailed out. They ask for the opportunity to dream, strive, and succeed in this country. And that's what this government should do. Instead of trying to bury our freedom beneath big government, they should allow our freedom to bury big government. Well, it's obvious that the first didn't work, just as the Wall Street bailout hasn't worked, and the president had to ask the institutions that received taxpayers' money to start actually unfreezing the credit markets. As you recall, unfreezing the credit markets was supposed to be one of the things the bailout did. Now, in terms of the stimulus, they've spent $1 trillion because you have to pay the interest. And look where we are today. They're still talking about spending even more. Worse, they've now combined the two, where they're taking TARP money and trying to use that for stimulus. The reality is our prosperity comes from the private sector, not the public sector, and until this administration understands that, we're going to continue to see them try to spend their way out of a recession and actually make things worse. We went up to 10% unemployment. And what you're seeing is the government bubble with massive amounts of government spending. What you're going to see is exactly the type of reports that show that government employment is up, government salaries are up, but this is distinctly different than the private sector. And even within the private sector, just because Wall Street stocks seem to be going up, you don't see the job growth and creation that comes from a healthy, entrepreneurial, innovative economy. The president seriously wants them to start loaning money, but unfortunately the Wall Street bailout, once it was passed, then told these institutions to recapitalize. And when they're recapitalizing, they're keeping money back. In my home state of Michigan, what we've seen are federal regulatory agencies coming into community banks that were not the cause of the Wall Street problems and the credit crunch, and actually tightening restrictions, forcing them to write down assets, forcing them to try to recapitalize in a very tight capital market, which is inhibiting their ability to loan money. So they're actually, I would encourage the president to look at his own regulatory agencies and see what they're doing to help capital be restricted. Well, what they can do is they can get a handy copy of the new Republican House Policy Committee pamphlet, We the People. We want to achieve our newest birth of freedom. If you care to receive it to find out what you can do and what the principles of the Republican Party are, you can go right to our website, policy.house.gov, and order yourself a copy. It'll be right there for you.